Welcome to the College Knowledge Podcast, sponsored by the College Planning Network and Paradigm Financial Group. Whether you're searching for that right fit college, applying to college, or figuring out how you're going to afford it all, you're in the right place. You'll hear from deans, admissions counselors, student athletes, and scholars from esteemed universities and colleges around the country. We'll dig deep to uncover their insight and unique experiences. So whether you're a student gearing up for college or a parent with college-bound kids, sit back, relax, and listen. Like you, we have lots of questions. Our guests have the answers, and we're excited to share them with you. Let's get started. All right, everybody, welcome back to College Knowledge. Today, no guests, two guys, two microphones.
Yeah, we're in the middle of September here, Dave. October is right around the corner. That's a big time because financial aid season officially will be opening on October 1st.
Yep.
My favorite time of the year.
Yeah, for sure. And this year, Joe, knock on wood.
Yeah.
But there should be no delays. There should be no issues. I think everybody is now on the level. It's taken 3 years to get here. Ultimately, if you haven't paid attention, the FAFSA has been a mess for the last several years. They seem to have it sorted out.
Seems to be ready to go. It doesn't look like there's going to be delays. The only changes that are being made is to make things a little bit smoother. Last year, when they did FAFSA simplification, students would have to complete and invite their parents. They had to do it with the parent FSA ID. So now apparently you can just do it with an email. Little things like that. When you're creating an FSA ID, verification is supposed to be pretty instant now. Usually it could take a day or two before you get, okay, yeah, it was verified with Social Security. So I think it seems like things should go off without a hitch. Still doesn't mean that there's not necessarily other issues with it that I'll always have, but I think we're looking to be on schedule this year for a change.
Yeah, and today is the 12th of September. You got to dust off them tax returns.
Yeah.
You got to really get the idea that you're one stroke away from either a great financial aid award or none at all, right?
Yeah. I know parents fear it, and I know that we talk October 1st. Regardless of how smooth things may go, it's always going to be delayed on October 1st. So you'll hear anybody that knows the game, you don't want to procrastinate, you want to get things early. It doesn't mean if you're not able to get things in until October 4th that you're going to miss out on aid.
Like, yeah, I mean, that quote you threw at me this morning.
October 1st, the FAFSA is just Ticketmaster the day Taylor Swift tickets go on sale. But eventually you'll be able to get a Taylor Swift seat maybe, where the FAFSA, you just get a spinning wheel and just waiting.
From that standpoint, and we'll get to the agenda in a second, but the FAFSA, the first week is always touch and go, timing, how many people are trying to get on. They definitely don't have what I would call the bandwidth to handle it all,
right?
But don't panic if that is the case.
As far as what we want to talk about, it's something every year. Obviously, we'll update anybody that has done the FAFSA before. What are some of the changes from last year? Not too many, but maybe your last time you filled this out was back in 2020 or 2019 when things were very different. So we will touch on what some of those differences are. A little bit about the formula, what goes into it. But ultimately, Dave, I think we're going to be talking about timelines. We're going to be talking about why it is important. Big mistakes that families have to avoid when they're doing this. How colleges are actually going to use this information. And although we always talk FAFSA, the one that gets overlooked a lot is the CSS profile, too, that I know we want to touch on a little bit.
And I know, Joe, you've got some Joe the College Pro tips for everyone today, too.
Of course. Always have some great tips, especially when it comes to financial aid. And again, tips and tricks are one thing, but I'm not going to be able to give you stuff to help you plan today, just to plan on this form, I'll say. Or educate, not necessarily plan, we'll put it that way.
Perfect.
Yeah.
All right, let's get to it.
Dave, I mean, the FAFSA, I think there's always myths that go around it. I think one of the biggest things that I always hear is, I'm not going to get any money from FAFSA.
Yeah.
Okay, so why don't you explain to people why that statement is wrong, but what actually is the FAFSA so that families understand?
First and foremost, the FAFSA doesn't actually give you money.
Yeah.
It is a calculation, essentially, and it is a calculation that is the gateway to financial aid in the college process. Financial aid is any money that you are given that reduces the out-of-pocket expense for college. So the FAFSA is the gateway in, and really it's a formula. It's administered by the federal government, and they take a certain sequence of numbers from you, your tax return, adjusted gross income, some other details about ages and number of family members, and then they spit out a number. That number is the SAI. It is a singular number at 21,473, 55,371, whatever it is. That is then what is distributed to the institutions that use the FAFSA form. So you're not going to get any money from FAFSA. That's a fact, because the FAFSA doesn't actually do anything other than calculate your student aid index, which is the number that the government tells you you can afford per year per kid for college.
Yeah. And anybody, if you do it, you're going to look at that and say, what they think I can afford. How much?
Yeah, it's always higher than you want it to be.
Oh, trust me. Yeah, it's always higher.
But don't make a mistake. It is just the gateway. It's just the entry point. It's just the do not pass go, do not collect $200 if you don't do it.
And there's certain money that you 100% will not have access to if you don't fill it out. Number one is any type of government loan.
Yep.
So when Dave says any money that can reduce the out-of-pocket cost, that does include loans. And so a government loan is 100% in the student's name. It's not in mom and dad's name. It is limited on how much the students can borrow. But we always say, look, every family I know I plan with, they want their kids to have some skin in the game.
Sure.
And it's not a bad loan, especially when you compare it to private loans. Again, no cosigner. Potentially there's forgiveness options. If you're going in the public sector, you should know what the details are about those loans. But
100%.
not always a bad interest rate, again, comparatively speaking. And the reality is that, it gives that kid skin in the game. So if you want to do that, you got to fill out the FAFSA. You cannot get
100%.
access to that money. Now, the free money that actually would come from, we'll say, the government, not the FAFSA itself, is a Pell Grant.
Yep.
And the Pell Grant has gone through some changes. They have widened things out a little bit, but it's pretty much mom and dad, if your parents didn't fill out a tax return, and not because they didn't fill it out, but because their income was so low, they weren't required to fill it out. You're basically automatically eligible for a maximum Pell Grant. And then after that, it would ask certain questions like, based on mom and dad's income, how many people are in the household? Are you married or is it a single parent? It then takes what the poverty level is, a percentage of that. And if your income is under a certain level, you are automatically qualified for the Pell Grant.
Yep.
After that, it matters what your student aid index is. And again, the student aid index doesn't have to be a high number to be disqualified from the federal Pell Grant. Now, I think one of the biggest misconceptions, because people, I know you've heard it, like, I make too much money, it's not even worth filling out. Again, you can't get those loans, number one. But the other side of it is that just because you're not eligible for a Pell Grant doesn't mean that you are now ineligible for all financial aid, even other grants and scholarships, because those can potentially come from the colleges. And one, the schools, that if they meet financial need, there are some schools that use the student aid index to say, okay, hey, we cost $60,000. The student aid index says that you can afford $30,000. So that $30,000 gap is your financial need. So they say, okay, we're going to give you $20,000 to help you out because we know you can't afford the full price.
Yep.
So that's where they can dictate how much money they offer you. And then even some schools, if they say, well, your student aid index is $100,000, Dave, I'm sure you know this.
Yep.
You filled out the FAFSA, you're asking for money. So we'll give you some merit-based aid. There are some schools that will say, you didn't fill out the FAFSA. You're not asking for anything. We're not going to give you anything. So there really isn't much of a downside to filling it out.
And I will take that to a different level, Joe, because this is a question that even people in the industry have gotten wrong in terms of should you fill it out, shouldn't you fill it out. If you want to pay retail college, don't fill it out. If you want any consideration, fill it out. It's that simple, right? Just because you have a high SAI, let's say it's $100,000 and the school costs $70,000, the school realizes that, hey, what do I have to do to get that family that can afford to write a big check to write that big check? And it's called financial aid leveraging.
Yeah.
And when they do that, they say, hey, Joe, sticker price is $70,000. You wouldn't pay $70,000.
No.
But what if I give you $20,000? And what if I make it a scholarship?
Oh,
then your
man.
kid's going, I love the school, Dad. Can we do it? Can we do it?
Yeah.
So again, just because you make money, when you put it on paper, they know where you stand. And I have article after article. We've done interview after interview with schools, with professionals in the industry to say the schools, if they have the information, they'll use it and they'll use it to their advantage.
Yeah.
Their advantage can benefit you because they realize, A, they're working on a yield number. Got to get their enrollment up. So if they don't make you a good enough offer and you don't go, they've just wasted an acceptance.
Yeah.
And schools are not trying to do that. So bottom line is fill it out. I don't care how much money you make.
I think the easiest way I say it is the idea of saying, I'm not going to play the lottery because I'm not going to win. All right, but what if the lottery ticket's free?
Yeah.
Why wouldn't you play? There is no downside. There's no costs
Correct.
to filling this out. So it is the free application for federal student aid. The other thing that always jumps out at me is, again, we talk to people, we read between the lines. And I think people sometimes misunderstand it. I think it was Franklin and Marshall is where the eye-opening piece came. But if you're late to the game with a financial aid form, or if you're early, if you're on the lists of schools that get it, there's something called demonstrated interest. And do colleges want procrastinators? Do colleges want somebody that's on top of their game?
Yep.
I think it was Franklin and Marshall was saying they learned their history that if you filled out on their application, you were going to be asking for financial aid, but you did not complete the FAFSA or first send it to them, they immediately said you're not coming, because they learned that anybody that did that and they accept it, it was like 99% of the kids went somewhere else.
Yep.
So they stopped wasting a seat on that. It's one of those little things where it's, if you're interested in attending a school, you're doing all the right things in the right time frame. It has nothing to do with an application, but guess what? It can give you a little bit of an edge over somebody else that's not doing all those steps that are required. It's funny because there are some schools that say if you file the FAFSA before December 1st, like it's an automatic $2,000 scholarship. Like they said, it's the same schools. Oh, if you come for a visit, we'll give you $1,000 off.
Yep.
Like they want to see that demonstrated interest is basically what they're doing. Let me see that you can do the work. I'll dangle a carrot out there. Maybe a little of it is try and get you interested in the school, but it's real. The easiest way to overpay for college, step number one, is just by not filling out this form. It's the easiest way, without a doubt. So that's how I was. There's no downside to it. Get it done. Like, yeah, takes a couple minutes. Be ready. Be prepared. We get into that too. But yeah,
You can't say it anymore clearly. There's no downside.
fill it out 100% of the time.
Shall we move on?
Sure. So not many changes from last year to this year.
Mostly efficiency and operational.
Yeah, and again, they update the formula slightly with cost of living and things like that for income allowances. But a couple years ago, if you're new to it, major changes, the very big changes, the biggest one still, in my opinion, is the 2 kids in school. We had families that they have a senior in college right now that their next child's coming along and they're saying, yeah, like, what do we have to do differently now that we have 2 kids in? And it used to be if your SAI with 1 kid in was 50,000, your second child came in, it would be divided by 2.
Multiplied by 1.2, then divided by 2.
Yeah, I mean,
something like that. If it was 50, they would go to 60 and then to make it 30 apiece
Yeah.
instead of, it was never.
Right. So that went out the window with the Simplification Act. So now if they say it's 50 per child, so in other words, they think you can afford twice as much. Doesn't make much sense to me. The other big change was for parents that are in a divorce situation, who is the parent that is known as the custodial parent and who's the non-custodial parent, what parent information has to be completed. It used to be whoever the student spent more than 50% of the time with.
Yeah.
And it used to be, okay, if it was 50-50, then it's who provides more financial support. They kind of changed that. And they say now it's whichever parent provides more financial support, which to me almost seems like a weird question to ask.
Yeah, it's a tough one. And we've had to deal with it too. I've seen where it's not a friendly situation and that certainly comes off the wrong way. And the FAFSA, unfortunately, the FAFSA is not sophisticated, right? When we get into the CSS profile a little later on, you can talk about they get a little bit more information, they dig a little bit deeper, and they're more considerate to some of those things. Some schools, right? Yeah. And before we get off the subject of CSS, the difference in the 2 forms is, remember, the FAFSA gives the SAI. The CSS profile gives the information. And so very different. You get a number and you have to make all your decisions based on a number if you're the school. If you get all of the information, you can do with that information what you want.
Correct.
Right? So you can create your own algorithms and your own formulas and look at it differently, which is not a bad thing.
It can be an advantage in some schools, disadvantage at others.
Yep. As we've witnessed this year, last year in particular.
Yeah. We had a couple episodes where we talked about different awards from different schools. I think Notre Dame and Brown was a big difference. Brown saying, you're only paying $8,000 at that other school. We're not going to act like you're paying 50. Yeah. You know, where Notre Dame's, you got 2 kids in school. We don't care what you're paying. It's a struggle.
And they do it mathematically and say, well, it's this and here's the second kid rate kind of thing.
So again, CSS profile is usually the schools that are much more generous from a need-based perspective. They're going to use that. And it's not a one or the other, by the way. It's you're going to need both. You still need to complete the FAFSA and the CSS profile. But with this big change with the FAFSA simplification, what I have seen and heard is that a lot of those schools that are CSS profile, they're not necessarily using your student aid index.
Correct.
They are saying you got to fill out the FAFSA because that's step number 1. Step number 1A, not even 2, is fill out the CSS profile. But your student aid index is not what we are going to base. We are going to base it off the formula that we use because we think that there are some flaws, like the 2 kids in school.
Yep.
And some other things that are different between the 2 that we can definitely highlight. But
certainly, and I think there's another component too, where these schools that use the CSS profile typically have larger amount of funds to dole out, so they want to be smart about it, right?
Yeah.
And make no mistakes, they're giving out funds in an effort to fill their enrollment, so they want to be strategic about the deployment of those funds.
I was actually looking at a couple statistics the other day, and just because I was speaking of Notre Dame, just to give you an idea of like why some schools may use the CSS profile. Any family that's a need-based family that attends there, it's an expensive school, so they say the formula, hey, we cost $90,000 a year. We think you can afford less than that. You are a need-based family.
Yep.
Their average need-based financial aid package is $67,000. So that's a school that's going to use the CSS profile. They are going to get more in depth, more detailed.
Let me just add a caveat here too that I think is important. This goes back to to fill out the FAFSA or not to fill out the FAFSA, right? There's this idea that it's either need or merit, and that is just not real. That is just not how it works. There is money, and there is a specific amount of need-based aid that all schools have allocated. If they can take you from this column and put you in this column because you're a good student and you have need, and they can satisfy it, they can satisfy both columns with a single scholarship, they will do so.
Yeah.
So let's say your SAI is 50 and the school is 70. Like, there's a $20,000 established need for that family. If you've got a 4.0 and good grade, they may throw a $30,000 scholarship. They are not going to throw 30 plus 20. That $30,000 scholarship effectively covers 100% of your need and then some. So that school still meets 100% of need, but they gave you no need-based aid. They gave you academic scholarship.
Right. Yeah. And that's where, man, you start throwing these terms around, and the easiest way that you described it like a visual is the pick and mix aisle.
Oh, yeah.
Right? At the grocery store, it's all right, we've got to fill this bucket. They can afford 30 grand, we're 70. So we got this bag that the capacity of that bag is $40,000.
Yep.
We don't meet 100%. So we're
sprinkling a little.
We're going to say, okay, there's going to be some of your own money that you've got to put in there. Okay. And that's going to be at the bottom of the bag. Now, okay, let's just say we got to fill the rest of the bag with $35,000. They're going to look at your profile. They're going to look at you as a student. They're going to look at you as what financially, where do you live? What other types of grants can you qualify for? Is there a specific scholarship or endowment that was for kids just from your state or for your major? And they start going, okay, you got 10 grand here, you got 5 grand here.
No, let's be honest. The second thing they go to is the loan.
The loan's number one.
They sprinkle in the $5,500 loan, then they put some of your money, then they grab this scholarship that's for students that excelled in whatever.
Yeah.
And then we need to fill the gap here. Let's say we got 15,000 left. Let's grab some need-based and pop it on top.
Yeah. And then they wrap it up in a very nice bow, and they send it in a letter, and they say, we're giving you this $120,000 scholarship that should be used over the course of 4 years. It's like, okay, it's 30 grand a year.
Correct. And that's marketing. That's marketing 101. If your child gets a letter and it says, congratulations, you've just been awarded the presidential scholarship, which is $160,000. It's really $40 a year. And that's nothing to scoff at. It has a different ring when it hits 6.5 figures.
Oh, God, yeah.
That's the game they play with the heart for the student, right? Imagine if you get 2 awards side by side. Cost of attendance is going to be the exact same to the family. Like, you are going to pay the exact same. It's going to be 30 grand no matter where you go. One says you got a $60,000 or $180,000 scholarship over 4 years. And one says you've got a $30,000 need-based grant and a $5,500 loan and $10,000 of scholarship.
And then you get the other school that costs $30,000 and you get nothing.
Yeah.
Which school is making you feel warm and fuzzy? When you get a big scholarship, it makes you feel like the school is honoring you for your achievements. They admire your hard work. The term grant, people look at that and say, oh, they think we're needy, right? They think we need this. That's not the same as the scholarship. And this school gave me nothing. When all 3 schools are actually the same price out of pocket, that's the marketing, that's the business side of the college financial aid world that everybody needs to know is real.
You can take our word or not. We've done this for 20 years as an organization, and we've dug into this heavily. The schools will never tell you that. They'll never admit to it. That's not true. We've had a couple of very interesting conversations with some deans of enrollment management and things like that were brutally honest, that said, yeah, absolutely we do that. We're need aware. So we're going to accept you, understanding your need, and we're going to give you this and this.
Yeah, and the other thing that I warned parents of seniors that were visiting schools, and I can't remember the exact school because I would say it. I just can't remember which one it was. I said, yeah, they're pretty giving. Everybody tends to get money. It doesn't seem like it's a school that anybody pays full price at, just based on numbers. That's what I love to do, is break down those numbers. But I said, actually, you say that, and they said that at the open house that we were at. They said, look, everybody's going to get at least 4 grand. And I said, okay, why do you think they said that? And this is where they plant seeds because, all right, everybody's going to get 4 grand. Now, all of a sudden, what if your award is 10? Don't you just feel like you just hit the lottery and it's, oh, wow, they gave us $6,000 more than what they said at that visit.
Yep.
Meanwhile, you should have got 15. They're already planting seeds. I had a family that went up to Boston. And Boston said, don't expect to get any money. You should be expecting to pay full price. I'm going, Boston, they meet a very high percent, if not 100% of financial need. That's their history. What are you talking about? And I'm like, oh, they're just planting the seeds that they say, if you expect nothing, if you should get a $30,000 need-based grant or scholarship, and all of a sudden they offer you 20, you're over the moon moon. You love it.
Because the expectation was set very low.
Yeah. So schools will set expectations and then basically under promise, and then they act them like they're over delivering, and you feel like you just won when in actuality it was all part of the game. It's how those things work, that they get people to overpay. Make no mistake, colleges are in a business of getting your kids to commit to their school and getting you as parents to pay the most amount possible. That is what they are trying to do. Fill their beds and make as much of a profit, right? That margin that they can hit on. Man, we're going down a tangent. Why don't we get back to the FAFSA a little bit?
All right, let's go.
How about we talk about some mistakes, Dave? I know
Sure.
you've seen plenty, but as far as some of the mistakes that families make that our listeners need to know, what do they need to make sure they're doing, that those things that are very common don't do these things?
All right, so first and foremost, fill it out. I think we've established that. Second one is the questions are vague, and they're vague on purpose, right? They're sort of grand questions. They're 20,000-foot questions, and they leave you to do the interpreting. One of the biggest mistakes is along the question of what are your assets? And so they don't necessarily define it for you right then and there. You can dig in if you're smart enough and you want to understand it. But the biggest mistake is that most families' largest asset is in their retirement. It's their IRAs, their 401ks, their 403bs, 457s, whatever retirement it is. And if you put that number on that page, it will instantaneously mess up your financial aid. So number one mistake, people include retirement. Do not include retirement. It is not required to be disclosed.
Yep. On that same note, I would say that home equity is another asset.
Yep.
If it's your primary residence, let me rephrase. So primary residence home equity, again, is an asset in some people's world.
Yeah.
But
we could get into nuance there if you want to, but
we won't. But that is, again, non-assessable on the FAFSA. You do not have to disclose your home value, your mortgage, the equity that you have in your primary residence.
Correct.
If you have a rental property or a vacation home, you do have to disclose that as part of your investments, is how they ask about it. The other one that I see when it comes to assets is when it does come to college savings accounts, usually 529 accounts. There was a change recently that it used to be it's any 529 that the parents own, you have to disclose, regardless of who the beneficiary is. So the new change is you only have to disclose the ones that are the beneficiary of the student who's filling out that year's FAFSA, like who you're filling it out for, okay? But if you do have those assets, they are a parent asset, not a student asset.
a huge mistake people will.
Big mistake. People think, oh, that's the 529 for Joey. That's his asset. No, I'm the owner of that if I own the 529. And my son is the beneficiary. Okay, so that is a parent-owned asset. Do not put it in the student assets. The reason why is the way the formula works. Student assets are assessed at a much higher percentage than parent assets are. You say, I got $100,000 in this account and it's my kids, that's going to increase what the schools think you can afford by about $25,000 a year. Over the course of 4 years, they're going to say everything the student has can go to college.
Yep.
Whereas parents, not nearly as severe. It's 5.63, something like that percent. That's a big one. And if you do have what's called an UTMA owned 529, that is also, even though it's technically owned by the student in the world of FAFSA, you would still put that as a parent asset. Don't list that there. Some of the biggest mistakes, I think, by far are those two.
Yeah, there's timing mistakes too.
Yeah.
Joe made mention earlier in the show that you want to be in early. Don't panic if it's not the first week. I really look at pre-Thanksgiving as that's your early window, those 45 days, right?
Yeah.
Get it done in October. Month of October is best, but middle of November for rolling admission schools, for schools that when they turn the switch on and they start accepting and rejecting, you want to have all that done.
Yeah.
You want to be ahead of that game.
Yeah, you'll see things. There's a state deadline. There's a general FAFSA deadline. The schools may have what's called priority deadlines. This is not taxes. You don't want to wait till the end with this. But also, again, October 1st, October 2nd, October 3rd, it's okay if you get it in before Halloween. I only say Halloween just because if you're doing any type of early action, early decision, then you're going to have a deadline of getting that in by November 1st is a typical date. But I usually try to say, hey, if you're doing any type of early application, get it in the month of October. If you're doing regular decision, rolling before Thanksgiving. That's usually the advice that I give. Because again, the way that the application process works, the month of November hits that deadline, they're looking at all those early applicants. If that's not you, Thanksgiving's a great time that you have everything sent in. You're done. Like it's, even though there are deadlines in January, no, get it in because that's when they're really going to start looking at that next round of students who are those regular decision students.
Yep.
So, yeah. I think some other mistakes that just the parents need to know is not necessarily one that they, if you're a senior now, you can't avoid, but it's understanding when taxes are used. And it's something called prior. So again, our seniors, they're going to be open, seniors in high school. It's going to be open October 1st this year, 2025. Your kid graduates in 2026, but they're going to be using the tax returns from last year, 2024, as your income in this formula. And so
sounds like an insider strategy.
oh my goodness, it's coming. So the insider tip is that you have to be aware of this if you do have younger kids, especially if you have a sophomore right now, because you have about 2 to 3 months to make sure that you have a solid plan heading into next year, that hey, if there's certain expenses that you have on the horizon, if there's certain things that you're going to be paying for next year that you were going to maybe cash out stocks, all of a sudden you cash out stocks, capital gain shows on that base year that they're going to use, and a capital gain is 100% added to your adjusted gross income. Not taxed the same, but all of a sudden you have a $30,000 gain that increases what the schools think you can afford. That would affect you for all 4 years.
Correct.
So that is a big mistake, that just not knowing how that works. The asset side of it is a question it's the balance of your assets the day you submit the form.
Yep.
So there's this look back on income, there's a different piece on assets, but again, working with professionals to make sure that you are positioned properly, that you don't have money in the wrong spots that hurt more than help you.
Yeah, you want a quiet year, right?
Yeah, you just want to make sure that you're always doing things right. So if you're a senior that's getting ready to fill this thing out, you're basically got to make sure that your assets are not going to hurt you in a way that if you have control over it, you're positioned right before you fill that form out. If you're a parent of a junior, you're in the tax year already, so don't do anything these last remaining months that would cause your adjusted gross income to go up. And if you're a sophomore or younger, you got to start planning right now from a financial standpoint, because this is how you win the game.
Yeah.
With that too, if you're a business owner, man, sophomores or younger, again, that January of sophomore year, you're a business owner, you have a lot more control over what that tax return is going to have. It can have a major impact on what the schools think you can afford, essentially lower the cost a lot at specific schools. So there's your insider tip that I can drop on you today.
Awesome stuff.
What about CSS Profile, Dave? What is some of the things? I know we touched on it again. It's different in that the schools don't get a number. They get all the information. They're going to use this formula. But what are some of the big differences that
retirement disclosure, home equity, money movement is more traced and tracked? I would put it this way. The CSS profile will look under every nook and cranny on your finances, which is not necessarily a bad thing, because the schools that use it are pretty sophisticated with how they use the information and how they give it. You're never going to know the number. We've got some technology that helps us get pretty close to the number, or at least how most schools look at it. You won't know whether they look at the second child versus not look at the second child. But at the end of the day, the CSS profile, where the FAFSA is 36 questions now?
Yeah, it might even be like 29. I
The
think
CSS profile is upwards of 400 if you've got to answer everything.
Yeah.
If you've got businesses, if you've got extra homes or real estate, they're going to dig into everything. So again, if you are, and you should also look to see if the school is a CSS profile school or a FAFSA school, because there's a lot more stuff you can do in the CSS profile to take care of the assets.
Yeah. And I think, again, the CSS profile, you mentioned equity, like primary residence does come into a factor. So that's a downside with that. But again, they also have a portion, most schools have a formula that even if it's not 2 kids in school, but you have younger kids that are approaching, they take that into consideration too, where the FAFSA does not at all. It used to be if you have multiple kids in school at the same time, it would have a factor that got changed, but now it's very different. And again, that's why you can see very different numbers from the CSS profile and the FAFSA, which is also why, like I said earlier, a lot of these schools that do use the CSS profile, and you got to fill out the FAFSA, but that SAI is irrelevant. Our number is what we're going to use.
Yeah, and really, if we want to get to the brass tacks, I can tell you why. They go to the deepest pocket first. And while all these schools have lots of money, the government has more money. And so they want to see if the government's going to offer any type of grant or scholarship from their perspective first before they go into their own coffers and create those awards.
I put a couple of these out on social media, and I'm just figured, hey, you know what? Why don't we just do a quick one?
Sure.
With the
Are you
student
going to
aid.
quiz me? Let's do it.
I can quiz you, sure, but
Let's see if I get close.
All right. Basically, if we have a family of 5,
Sure.
the family, their adjusted gross income is $130,000.
Okay.
Paid $7,000 in taxes. You got some child tax credit, so that number's a little bit lower. And between between all their checking, savings, all the assets that they should be reporting, okay? They have 100,000 in, say, checking, savings, 529s, and they have about $500,000 in retirement, and the equity in their house is about 200,000.
Yeah.
What do you think their student aid index would be?
100,000.
100 in assets, 130 in income, family of 5. These are big things.
27. 26.
You were right in coming down, so it'd be 22,776.
I don't know that equation in my head.
If you went to family of 4 with 2 kids, it's 26,569. So you're right. It's all these little things, and that's why, guys, it doesn't just go off of your income. It goes off of a lot more. So I want to take that same family, Dave, and just explain some of the mistakes we mentioned.
Yep.
So, like I said, $130,000 in income, $100,000 in non-retirement. I mentioned the retirement assets and the home equity, but you correctly didn't add that to the equation.
Yep.
What I know you did in your head. But let's just say mistake number 1, the family ends up reporting $500,000 of their retirement on this FAFSA.
42,000.
50,976.
That's at the 4 kids, though. No,
No, that was the 5.
Okay.
So I added $500,000 to their assets,
Yep.
and it jumped up to 51,000. Okay, so that one mistake went from 22.7 to that huge number. And so obviously, again, schools think you can afford that much more. You don't have financial need where you did.
And here's the other issue that maybe we didn't discuss. If you make a mistake on the FAFSA, right, it's not just this quick fix, go back. You have to go fix it. It has to then go and recalculate, get redistributed, and the length of time before it gets back in front of somebody that can make a decision on finances, 4 weeks, 6 weeks maybe, and the money could already been sent. And so they may not be able to change it. So you really don't want to make mistakes on it. So that disclosure right there, that's a $30,000 a year. That's a $120,000 mistake.
Yeah. And then the last mistake I'll show. So of that $100,000,
Yep.
let's say 50 of it was in a 520 for their kid, their oldest, and they listed it as a student asset. Again, we went from 22.7.
It's got to be 7-8 grand, right? A year.
Let me see. Let me change that. Yeah, it went up to 32, almost $10,000 more.
Wow.
I'm sorry, 30,000. Yeah, so it went up about $7 grand because you disclosed that $50,000 as a student asset. And again, that's just not properly positioning or not properly answering questions. So yes, can this thing be scary? 100%. But if you're working with somebody that knows how to play the game, if you're working professional that knows the ins and outs like we do, it's not rocket science. Can be very.
We're smarter than the average bear, Joe.
No, but I mean, it's again, work with people that are knowledgeable on it.
100%.
Don't just assume things. Somebody says, "Oh, you're not going to make any money. Don't fill it out." That's somebody you should be running away from because they don't know how the system essentially works. Is what I'm getting to.
And then I always use the accountant because a lot of people rely on their accountant for advice, especially as it comes to forms and stuff like this. The one problem you face there is that an accountant's role is to reduce your tax liability. You can do things in bad years to reduce your tax liability, really upset the financial aid system. They did something that saved you 10 grand and it increased the cost of college by 20 grand a year. Yeah. That's a problem. So
the easiest thing there I see is the use of Roth IRAs in that base year.
Yep.
There's so many things. You sell a property the wrong year. You do a rollover, but you don't list it on the FAFSA that it was a rollover. All that income it's all counted as untaxed income.
Yep.
Oh God. So there's definitely things that can happen that you just need to be, again, educate yourselves, take the time to either work with somebody that knows it or, like you said, somebody that dives in and does.
Sure.
Want to know how to answer every question. The information's out there. ChatGPT gets it wrong sometimes. So
sure does.
Make sure you're getting your info from the right source. Yeah,
I think that's financial aid. I think that's the skinny on it, right?
Yeah.
Fill it out on time, fill it out accurately.
Yeah, and if you do have students that are that younger age, next Tuesday, Dave.
Yes, we are.
We have a fun night planned together with a live Q&A.
Joe, do you know almost 1,000 people registered for that?
I do. Yeah.
The last count was just over 900.
It's that time of the year, Dave.
Yeah,
so
certainly is.
Seats will be limited. So if you are hearing this, and again, that Q&A, it's not really going to be for seniors, I would say. I would say it's more along the lines of a little bit strategic juniors or younger. So if you do have that junior or younger, make sure to tune in. And I know I have stuff on my website. I don't know. You can find it at Elite Collegiate Planning too.
Sure.
But Joe the College Pro, that's on my website as well. All the details on how you can get registered for that live Q&A webinar that Dave and I will be hosting. Yeah.
Awesome.
This has been I think a great financial aid episode, one of our favorites that we do every year. And then we will get through this season. We got some great guests lined up and looking forward to.
Yeah, we are booked.
Yeah, we're going to have some fun episodes for the rest of this season. May will be here before you know it, without a doubt. Yeah, until next time, stay safe, stay strong, stay sane.
Hey, best of luck in the financial aid season, guys.
Yep. This has been College Knowledge. We'll see you next week.